It is
Before we
February
jump in,
2026. Smart
let's just
money
get
is
the
dumping
mandatory part out of the way.
semiconductors and
You'll see
rushing
it on the
into
screen now in
shipbuilding.
big red
Foreign
letters.
investors are buying Hanwha
Everything we
HD
discuss today
KSOE.
is for
Why?
investment
Because of
reference
Trump's
only.
Project Mass shipbuilding
The
plan. It is
responsibility for
February
any investment
2026.
decisions
Smart money
lies
is dumping
squarely with you, the
semiconductors
investor.
and rushing into
We're not
shipbuilding.
recommending you
Foreign
buy or
investors are
sell
buying
anything
Hanwha HD
specific.
KSOE. Why?
Okay,
Because of
with that
Trump's
said,
Project
let's get
Mass
real.
shipbuilding
It's
plan. It
February
is February
2026.
2026. Smart money
And
is
I
dumping
genuinely believe that
semiconductors
if
and
you miss
rushing
what's
into
happening right now,
shipbuilding.
this,
Foreign investors are
this
buying Hanwha
specific
HD
gem,
KSOE.
you might be kicking yourself for the next decade.
It's true. Everyone is still staring at the sky, looking at AI, tech, the stars.
But the smart money, it's not looking up, it's looking out towards the ocean.
It's a huge rotation, and honestly, most people are completely missing it. They're just watching their tech portfolios and wondering what's going on.
Massive doesn't even begin to describe it. Welcome to our deep dive. I'm your guide, and I've got the, let's call them battle scars from 20 years in this market. I've seen it all. And today, we're unpacking a capital shift that, to me, feels historic. We're calling it the Great Rotation, away from semiconductors and into heavy industries.
It's fascinating because it just completely flips the script on the narrative we've been fed for the last, 5 years.
Right.
We're seeing a fundamental move away from the, let's say, abstract world of software and chips and into the very tangible, very real world of steel, ships, and defense.
Exactly. And I know so many of you are probably feeling that portfolio fatigue. You're holding on to Samsung Electronics. You bought the dips, and now you're just staring at a red screen while these quote-unquote boring industrial stocks are hitting new highs.
It's a frustrating place to be.
It is. So we're going to dig into why that's happening. We've got data from the Korea Exchange. We've got reports on this MASGA project and export logs that, well, they paint a very, very specific picture.
So where do we start? I think we have to follow the money, the foreign money.
Always follow the money. So let's look at the what. What is actually happening?
Yeah, and this isn't just a trickle, it's a flood.
It is. Okay, so on the screen, imagine a bar chart. This is foreign net buying for January 2026. Data straight from the Korea Exchange. And what you'll see is what I'm calling extreme polarization. It's shocking.
The headline number is 2.62 trillion Korean won. That's the total net buy from foreigners in January.
Smart money is dumping
February
semiconductors from
money
Korean
is
shipbuilding.
dumping
Foreign investors are buying
Right. But that number hides a really brutal rotation happening just beneath the surface.
It's the mix that tells the story. Look at the sell side, the red bars. Foreigners sold about 3.4 trillion won worth of Hyundai Motor.
And get this, they sold 2.7 trillion won of Samsung Electronics.
Let that sink in. Selling almost 3 trillion won of the national stock of Samsung in 1 month. That's not just rebalancing a portfolio.
No, that's a statement, a very loud one.
It's a statement. So the big question is, where did all that cash go?
Well, it didn't leave the country. Over 2 trillion won went straight into one sector, shipbuilding.
And the number one net buy across the entire market, Hanwha Ocean. Foreigners bought almost 900 billion won of just that one company.
Just think about that. They are actively selling the champions of the last decade, cars and chips, to buy shipbuilders.
Right. And you hear the junior analysts on TV, they're calling it sector rotation.
Which is such a generic term.
It is. But to my eye, and I've been watching this stuff for 20 years, this looks like a flight to safety.
That's an interesting phrase, because most people hear shipbuilding and they think of volatility, cyclical risk, bankruptcy. They don't think safety.
Because the definition of safety has changed. This reminds me of the shift we saw after the 2008 crisis, but it's much more aggressive.
How so?
Foreign investors are looking at AI and they're asking tough questions. Is the demand peaking? Are the margins about to get squeezed? They're moving away from growth, which is suddenly full of uncertainty.
And into certainty of profit. They want to see the cold, hard cash on the order books, not just the promise of future growth.
Exactly. Which brings us to the why. Why now? Why shipbuilding? We've seen false starts in this sector so many times before.
Is this one different?
I believe it is. This is the shipbuilding supercycle. And look, I remember the last boom in the mid-2000s. That was all about volume.
And I remember the bust that followed.
Oh, the 2010s restructuring was a bloodbath, an absolute bloodbath. I remember visiting George Island back then, and the mood was just grim. Yards were taking on terrible low-price orders just to keep the lights on and keep people employed.
It was a race to the bottom.
It was. But this time, the data shows it's fundamentally different.
It's a qualitative leap. I mean, look at the operating profit for the big 3 HD Korea shipbuilding, Samsung Heavy and Hanwha Ocean.
What are the numbers?
It's projected to go from about 2.1 trillion won in 2024 to nearly 6 trillion won for 2026. It's almost a threefold increase.
6 trillion, that is a serious number.
Yeah.
And that's not coming from building more ships. It's from building better ships at much, much better prices.
Exactly. It's strategy, not just brute force volume. I mean, they have a backlog of 3.5 to 4 years of work already. They're not desperate.
They're not. They're practicing what's called selective ordering.
And this is a key idea. Selective ordering means they are finally in the driver's seat.
In the past, the shipowner held all the cards. They'd demand discounts, better payment terms. The yards had to say yes.
Now the yards are the ones saying, this is our price, these are our terms, take it or leave it. It's a complete power shift.
It's a seller's market. And what are they selling?
High-end LNG carriers, that's the crown jewel. And Korea is building 93% of the global orders for 2026.
93%. Let's just pause on that. That's not market share.
No, that's a monopoly on the highest tech ships in the world.
The Chinese yards, yeah, they're catching up on the simpler stuff, the bulk carriers. But for the complex cryogenic tech you need for an LNG ship, the world comes to Korea.
It's a monopoly on quality. And you see it in the prices. The new building price index is through the roof. A single large crude carrier, a VLCC, now costs about $130 million.
Which is huge. But, okay, if this is just a simple supply and demand story, I'd be interested but cautious.
But there's more to it.
There's a massive geopolitical catalyst that basically just lit a rocket under this entire sector.
You're talking about the Trump administration and the MASGA project.
MASGA, Make America Shipbuilding Great Again.
This sounds like a campaign slogan, doesn't it? But there is very real money behind it. About $150 billion. That's roughly 217 trillion won.
But why are they doing this?
Yeah.
Because the U.S. has woken up and realized its own shipbuilding industry has, for all intents and purposes, collapsed.
It's not just an economic problem for them anymore. It's a full-blown national security crisis.
Right. Think about it.
Yeah.
You can't project naval power if you can't build new ships or, crucially, repair the ones you have.
And at the same time, you see China's naval capacity just exploding. They're launching ships at a rate the world hasn't seen since World War II. The U.S. simply can't keep up.
Their yards are old. They don't have the skilled labor. The supply chains are broken. So they need help. They need a partner.
An ally with the tech, the capacity, and the speed to fill the gap. And there's really only one answer.
Korea. Which leads to this idea of the bridge strategy. This is the real game changer.
They're essentially looking for a clever way to work around the Jones Act.
For anyone who doesn't know, the Jones Act is this ancient law from 1920 that says any ship moving goods between U.S. ports has to be U.S. built, U.S. owned, U.S. crewed. It's been this wall of protectionism for a century.
But that wall is starting to crack because the reality is they need ships. So this bridge strategy would allow Korean yards to build and, maybe more importantly, maintain ships for the U.S. market while America rebuilds its own industrial base.
And that's the key word right there, maintain.
MRO, maintenance, repair, and overhaul.
This is the part that gets me really excited as a strategist, because it's the most misunderstood part of this whole story.
It's all about recurring revenue.
Exactly. Selling a new ship is great. You get one big paycheck. But MRO,
Right.
that's steady, predictable cash flow.
Yeah.
It's like you're not just selling the car. You own the service center for the next 20 years.
And it's a huge market. We're talking about 20 trillion won a year.
If a recession hits, a company like Maersk might cancel orders for new container ships. But the U.S. Navy, they don't take a day off for a recession. Their destroyers and aircraft carriers always need to be fixed.
It's government-guaranteed demand. And you're already seeing the Korean companies making their moves.
Hanwha Ocean bought the Philly shipyard. HD Hyundai is getting its MSRA certifications, the Master Ship Repair Agreements.
They're positioning themselves to capture this market.
They are. Even if they get just a 25% share, that's 5 trillion won in new, stable revenue. That's why foreigners are piling into Hanwha. They're not just buying a cyclical shipbuilder, they're buying a piece of the Pentagon's budget.
But we should probably widen the lens a bit because it's not just about ships, is it? It's more like a heavy industry package.
That's a perfect way to put it. It's a package deal. Foreigners aren't just buying shipbuilding. They're buying defense and nuclear right alongside it. It's like they're creating their own global instability ETF.
The security and energy bundle.
Exactly. So let's talk defense first. The order backlog for Korean defense companies is now over 100 trillion won.
Which is just an insane number.
That's what we're calling golden time for K-defense. I mean, look at Europe. They desperately need tanks, artillery, and they need it now.
And the traditional suppliers, like Germany, can't deliver. Their production lines went cold after the Cold War. If you order a Leopard tank today, you might get it in 5 years.
Maybe. But Korea, we never stopped. Our line stayed hot. So when Poland or Romania needs 1,000 tanks, we're the only ones who can actually deliver them in a reasonable time frame.
So you have Hyundai Rotem with the K2 tanks, Hanwha Aerospace with the K9 howitzers. They are becoming the new standard.
And then you have the final piece of the puzzle, nuclear.
Which, ironically, ties everything back to the tech portfolio everyone is so worried about.
It does. People forget one simple fact. AI runs on electricity. Massive amounts of it.
A single AI data center can consume as much power as a small city. And you can't run that on intermittent sources like solar or wind. ChatGPT can't go offline just because it's a cloudy day.
You need stable 2047 baseload power. And with coal being phased out for ESG reasons, that really only leaves one viable option at that scale.
Nuclear, specifically small modular reactors or SMRs.
And Doosan Enerbility is right at the heart of that, manufacturing the key components for the leading SMR designs globally.
So you have this perfect trifecta: ships for global logistics and naval security, tanks for land security, and nuclear for energy security.
It's the ultimate 2026 survival kit. It's both defensive and offensive.
Okay, but we have to be balanced here. We're doing a deep dive, not a sales pitch. Nothing goes up in a straight line forever. What are the risks? What keeps you up at night on this trade?
The analysts are all bullish, the reports are glowing, but my 20-year eye, it worries about people.
The labor shortage.
It's the Achilles heel of this whole story. We need thousands of skilled welders, electricians, engineers, and frankly, young Koreans don't want to do that kind of work anymore.
So we're relying more and more on foreign labor, which comes with its own set of challenges: training, communication, productivity.
Right. I've seen this happen before. A yard gets swamped with orders, can't find the workers, and deliveries get delayed.
Yeah.
And those delay penalties can wipe out your entire profit margin. It's a huge risk.
I'd also add raw material costs to that list.
For sure.
Steel plate prices are okay right now, but steel is about 20% of the cost of a ship. If China decides to launch a massive infrastructure stimulus to prop up its economy, the price of iron ore and steel could spike.
And that would eat into those beautiful margins we were just talking about. So you have to watch China. And, of course, the big macro risk.
The exchange rate.
Yep. Right now, the strong dollar is a massive tailwind for these companies. They get paid in dollars, but their costs are in won. It's perfect.
But if the U.S. Fed starts cutting interest rates aggressively later this year, the dollar will weaken. And that tailwind could turn into a headwind pretty fast.
So, with all that in mind, the supercycle MASGA, but also the labor and cost risks, how should someone listening actually apply this? What's the practical advice?
What's the takeaway?
Okay, 3 things. First, please do not chase these stocks when they go vertical. Use a guide, like the 20-day moving average.
Can you just quickly explain that?
Sure. Think of it as a stock center of gravity. When the price shoots way up, far above that line, it tends to get pulled back down. Wait for the pullback. Wait for the price to come back and touch that line. Be patient with your entry point.
Don't buy into the hype.
Second, balance. I'm not saying sell all your tech stocks tomorrow. AI is a real long-term trend. But if your portfolio is 80% tech, you are taking on too much concentrated risk. Yeah. You need to consider overweighting these heavy industries for the next couple of years. It's a hedge.
Makes sense. And third?
Third, watch that exchange rate. The $1 rate is like the pulse of this entire trade. If you see the one strengthening quickly, it might be a signal to start taking some profits off the table.
When you zoom out, the big picture here is a real mindset shift.
It is. The market is telling us loud and clear that the era of growth at any cost is, at the very least, on pause.
And the era of strategic assets is here.
Security.
Energy. Logistics.
So I tell people, stop thinking of shipbuilding as just another cyclical play. In this new world, it's become a geopolitical safety stock. If you're sitting on tech stocks that are underwater, maybe consider rotating a portion out. But be patient. This supercycle isn't going to play out in a week. It's a multi-year story.
We're probably only in the first or second inning of this game.
You know, it reminds me of office life. You have the flashy presenter with the great PowerPoint slides who gets all the attention. That's the tech sector.
Mm-hmm.
But then you have the quiet engineer in the corner, the one who actually knows how to keep the factory running. That's heavy industry, not glamorous. But when a crisis hits, suddenly everyone realizes they're the most important person in the room.
And it feels like it's their turn to get the promotion.
It really does. At the end of the day, the market is a stage for survival. The wise choice isn't always the popular one.
A great place to leave it.
Absolutely. We'll be watching this space very closely. If this deep dive helped you make sense of your 2026 strategy, please go ahead and subscribe, like, and hit that notification bell. It really does help us keep the channel going. This has been Understanding the World Through Stocks. We'll see you in the next analysis.